I'm sure you've heard the news. It's the Gorilla Mansion podcast, back with another market moving update. And let me tell you, things are heating up in the world of Bitcoin. We smashed past $58,000 today, a significant level indicator on the chart. That's right, Bitcoin is on a tear, leaving the doubters and the naysayers in the dust. This surge is a huge sign that the crypto market is back in recovery mode. After a long winter, the bulls are back in charge. But hold on, because not everyone is convinced. Some traders are still skeptical. They're looking at this rally with a wary eye, wondering if it's too good to be true. And you know what? They might have a point. We've seen this song and dance before. Bitcoin makes a run, everyone gets excited, and then bam, the rug gets pulled out. So the question on everyone's mind is this rally different? Is this the start of a new bull market or just another pump and dump? That's what we're here to find out today. We're going to dive deep into the charts, look at the data, and separate the signal from the noise. So buckle up, smash that like button, and get ready for another wild ride in the world of crypto. Now, let's talk about the skeptics. These are the traders who are looking at this Bitcoin rally with a healthy dose of suspicion. And honestly, who can blame them? We've been burned before. But what's driving their doubt? Well, it all comes down to something called funding rates. Funding rates are basically a way to measure sentiment in the market. They tell us whether traders are leaning bullish, expecting prices to go up, or bearish, expecting prices to go down. And right now, the funding rates on major exchanges like Binance and BitMEX are telling a very interesting story. Despite Bitcoin's price surge, a lot of traders are actually shorting Bitcoin. That means they're betting that the price will go down. They're basically saying this rally is a fluke and it's going to crash back down soon. This creates a fascinating tension in the market. On one hand, you have the price of Bitcoin going up, but on the other hand, you have a lot of traders betting that the price will go down. So what does this all mean? Is this Bitcoin rally doomed to fail? Well, not necessarily. In fact, according to some analysts, this skepticism might actually be bullish for Bitcoin in the long run. Here's why. When a lot of traders are shorting an asset, it creates something called short squeeze potential. Basically, if the price of the asset starts to rise unexpectedly, like it is now, the traders who are shorting it will be forced to buy back the asset to cover their losses. This buying pressure can create a snowball effect, pushing the price of the asset even higher. So, ironically, the very traders who are betting against Bitcoin might actually end up fueling its rise. Of course, there are other factors to consider as well. We'll need to keep a close eye on things like trading volume, technical indicators, and overall market sentiment. But for now, the fact that so many traders are doubting this rally might actually be a good sign for Bitcoin bulls. Now, I know what you're thinking. You just said Bitcoin is soaring, so why are these traders betting against it? Well, it's all about timing and risk. These short sellers, they're like daredevils trying to time the market perfectly. They believe this rally is a fluke, a temporary blip, before Bitcoin plummets back to earth. They're looking for a quick profit, betting that they can get in and out before the music stops and the chairs are gone. But here's the thing about shorting. It's incredibly risky. If they're wrong, and Bitcoin continues to climb, their losses can multiply rapidly. Imagine being on the wrong side of a tsunami. That's what it's like to be short on Bitcoin when it decides to take off. The more it rises, the more they lose, and the pressure builds until they're forced to buy back at a higher price just to limit their losses. So why do they do it? Well, some traders thrive on that high-risk, high-reward lifestyle. It's the thrill of the gamble, the adrenaline rush of trying to outsmart the market. But remember, folks, for every big winner in the shorting game, there are countless others who got burned. Binance and BitMEX, the bear dens. Let's take a closer look at where this shorting action is happening. Two words: Binance and BitMEX. These exchanges are like the Wild West of crypto, where the big players place their bets and the leverage can be insane. Binance, the world's largest crypto exchange by volume, is a hotbed for short sellers right now. The data doesn't lie. A significant chunk of traders are opening short positions, essentially betting against Bitcoin's rise. BitMEX, known for its high leverage and volatile trading, is another hub for bearish sentiment. Traders there are also piling into shorts, adding fuel to the fire. These funding rates, they're like a barometer for market sentiment, and right now, they're flashing warning signs. But remember, folks, just because some traders are bearish doesn't mean they're right. The market has a funny way of humbling even the most seasoned veterans. Can FUD fuel a Bitcoin boom? Here's where things get really interesting. This wave of negativity, this fear, uncertainty, and doubt, FUD, it could actually be the catalyst for a massive Bitcoin surge. How? Remember that term short squeeze we talked about earlier? This is where it comes into play. As Bitcoin continues to climb, those short sellers are starting to sweat. They're feeling the heat and some are getting ready to bail. And when they do, they'll be forced to buy back Bitcoin at a higher price to cover their positions. This buying frenzy can create a chain reaction, pushing the price of Bitcoin even higher, even faster. It's like a pressure cooker, and the more FUD builds up, the more explosive the release could be. So, while the doubters are busy placing their bets against Bitcoin, they might just be setting the stage for its most epic run yet. Of course, this is just one scenario, and there are a lot of moving parts in the crypto market. But the possibility of a FUD-fueled Bitcoin boom is definitely something to keep an eye on. Santiment's smoking gun. Now, let's bring in the data detectives at Santiment. These guys are like the Sherlock Holmes of crypto, always digging deep and uncovering the hidden clues in the market. And recently, they dropped a bombshell report that has everyone talking. Santiment's chart shows a clear trend. As Bitcoin's price climbed, the number of short positions on Binance and BitMEX skyrocketed. It's like watching someone double down on a losing hand in poker. They see Bitcoin going up, yet they're convinced it's about to crash and burn. These short sellers are betting against the house, and Santiment's chart suggests they might be in over their heads. But here's the kicker. Santiment believes this FUD could actually be a bullish signal. They argue that this widespread skepticism is creating the perfect conditions for a short squeeze. Remember, folks, when the crowd zigs, sometimes the smartest move is to zag, and right now the crowd is shouting short Bitcoin from the rooftops. Decoding the funding rate puzzle. Now let's break down this whole funding rate thing a bit further. I know it can sound complicated, but bear with me because it's crucial to understanding what's happening in the market. Think of funding rates like a balancing mechanism. When more traders are long Bitcoin, expecting the price to go up, they pay a small fee to the short sellers. This incentivizes more people to take the short side, bringing the market back into equilibrium. Conversely, when more traders are short Bitcoin like they are now, they pay a fee to the long holders. This is exactly what's happening on Binance and BitMEX. The funding rates are negative, meaning short sellers are paying a premium to hold their positions. This tells us that the bears are feeling the pressure. They're willing to pay a price to maintain their bearish bets, even as Bitcoin continues to climb higher. It's like trying to hold a beach ball underwater. Eventually, something's gotta give. When fear turns into rocket fuel. So we've got a perfect storm brewing. Bitcoin is surging, short sellers are piling in, and funding rates are flashing red. This is where things get really exciting. Imagine you're a surfer and you see a monster wave building on the horizon. That's what it's like to be a Bitcoin bull right now. The energy is palpable, and the potential for a massive move is undeniable. As Bitcoin continues to defy the doubters, those short sellers are going to start feeling the heat. Their losses will mount, and they'll be forced to buy back Bitcoin at higher prices to cover their positions. This buying pressure will create a ripple effect, pushing the price even higher and triggering a chain reaction of liquidations. It's like lighting a match near a pool of gasoline. The initial spark might be small, but the resulting explosion can be enormous. And that, my friends, is the power of a short squeeze. It can turn fear and doubt into rocket fuel, propelling Bitcoin to heights we never thought possible. The FUD paradox, doubters fueling the fire. It's a strange paradox, isn't it? The more people doubt Bitcoin, the stronger it seems to become. It's like those doubters are unknowingly throwing fuel on the fire, feeding the beast they fear. You see, this FUD, this fear, uncertainty, and doubt, it creates a coiled spring of energy. Every short position, every negative headline, every skeptical comment, it's adding to that tension. And like any good spring, at some point, it's gonna release. And when it does, watch out. That release of energy, that's what fuels those parabolic moves, those explosive rallies that leave the doubters speechless. It's like Bitcoin thrives on proving people wrong, feeding off their negativity. So the next time you see someone spreading FUD about Bitcoin, don't get discouraged. Instead, think of it as a sign, a signal that something big might be brewing. Remember, sometimes the greatest opportunities are born out of fear and uncertainty. Contrarian investing, when being wrong feels oh so right. Now, I'm not saying you should blindly bet against the crowd, that's a recipe for disaster, but there's a fine line between being reckless and being a contrarian investor. Contrarian investing is all about looking for opportunities where others are afraid. It's about zigging when everyone else zags. And when it comes to Bitcoin, being a contrarian can be incredibly profitable. Think about it. When Bitcoin was trading at $3,000, everyone thought it was dead. It's a bubble, they said. It's going to zero. But the contrarians, the ones who saw the potential amidst the fear, they bought in. And when Bitcoin surged to $20,000, they were laughing all the way to the bank. So if you see everyone and their mother shorting Bitcoin, take a step back and ask yourself, am I missing something? Maybe, just maybe, the crowd is wrong. And maybe, just maybe, that's your opportunity to strike. Riding the short squeeze wave, strategies for the brave. Now, I know some of you are itching to jump into the action. You see this potential short squeeze and you want in. But before you do, let's talk strategy. Riding a short squeeze wave can be exhilarating, but it's not for the faint of heart. First and foremost, never invest more than you can afford to lose. Short squeezes can be volatile and things can change quickly. Don't get caught holding the bag when the music stops. Second, set clear entry and exit points. Don't get greedy, have a plan and stick to it. If Bitcoin reaches your target, take profits. Don't wait for it to go to the moon and then crash back down to earth. Finally, be patient. Short squeezes don't happen overnight. It takes time for the pressure to build, for the shorts to get squeezed, and for the price to explode. So buckle up, hold on tight, and enjoy the ride. Rekt Capital's Crystal Ball. All right, crypto comrades, let's tap into the mind of a true Bitcoin wizard, Rekt Capital. This analyst is known for his sharp insights and uncanny ability to read the charts like a hawk eyeing its prey. And right now, Rekt Capital is seeing some very interesting signals in the Bitcoin matrix. One of Rekt Capital's key indicators is Bitcoin's weekly close. He's been watching it like a hawk, and for good reason. You see, a strong weekly close above a certain level can signal a shift in momentum, a sign that the bulls are ready to run wild. And guess what? Bitcoin just closed above a critical level, $53,250. That's right, folks. We smashed through that resistance like a wrecking ball, and Rekt Capital believes this could be a major turning point for Bitcoin's price action. So, what does this mean for the average Joe trying to navigate the crypto jungle? Well, it means keep your eyes peeled and your ears open, because things are about to get interesting. $53,250, the line in the sand. Now, why is this $53,250 level so important? Well, according to Rekt Capital, it all comes down to something called the bargain buying zone. Imagine a store having a massive clearance sale on your favorite items. That's what's happening with Bitcoin right now, but instead of clothes and shoes, it's digital gold. This bargain buying zone is like a magnet for big-time investors, the whales of the crypto world. They see Bitcoin trading below its true value, and they're ready to scoop it up at a discount. And when those whales start buying, they can push the price of Bitcoin higher faster than you can say Satoshi Nakamoto. So by closing above $53,250, Bitcoin has essentially flashed a giant buy now sign to these whale investors. And trust me, when those whales start buying, they don't mess around. The September slump myth or market reality? Now, before we get too carried away with all this bullish talk, let's address the elephant in the room, September. Historically, September hasn't been kind to Bitcoin. It's like that friend who always shows up late to the party and brings the mood down. Some traders even call it September because of its tendency to bring bearish vibes to the crypto market. They point to past data, showing that Bitcoin has often experienced pullbacks in September, as traders take profits from the summer rally. But here's the thing about history. It doesn't always repeat itself. Just because Bitcoin has struggled in September before doesn't mean it's doomed to do so again. In fact, this time could be different. We've got a confluence of factors that could buck the September trend, including the massive short squeeze potential we discussed earlier. So, while it's wise to be aware of historical patterns, don't let them paralyze you with fear. The Bitcoin Risk Index. A storm is brewing. All right, crypto crew, let's dive into the world of indicators and talk about something called the Bitcoin Risk Index. Now, I know this might sound a little intimidating, but trust me, it's not as complicated as it sounds. Think of the Bitcoin Risk Index like a storm warning system for the crypto market. It measures the likelihood of a big price swing, either up or down. A high index reading means there's a lot of volatility brewing, like a Category 5 hurricane about to make landfall. And right now, folks, the Bitcoin Risk Index is flashing red. We're talking about levels we haven't seen since mid-August, back when Bitcoin was doing the cha-cha slide all over our charts. It's enough to make even the most seasoned trader a little bit nervous. So, what does this mean for Bitcoin's price action? Well, it means buckle up, Buttercup, because things could get bumpy. $99.62, the number that has everyone talking. That's right, you heard me correctly. The Bitcoin Risk Index is currently sitting at a heart-stopping 99.62. That's like standing on the edge of a cliff and feeling a strong gust of wind. One wrong step, and it could be a long way down. Now I know what you're thinking. BitBoy, should I be hitting the panic button? Should I sell all my Bitcoin and run for the hills? Hold your horses, my friend. Remember, high volatility can cut both ways. While a high-risk index reading does increase the likelihood of a price drop, it also increases the potential for a massive surge. It's like playing roulette. The higher the stakes, the bigger the potential reward, but also the bigger the risk. So, what should you do? Well, that depends on your risk tolerance and your investment strategy. If you're the cautious type, you might want to tighten your stop-loss orders and protect your profits. But if you're feeling brave, if you're ready to ride the lightning, then this could be your chance to make some serious gains. Just remember, never invest more than you can afford to lose, and always have a plan. The calm before the storm? Now, some analysts believe that this high Bitcoin Risk Index reading could actually be a bullish sign. They argue that it's creating a powder keg of potential energy, just waiting for the right spark to ignite a massive rally. Think about it like this. When the market gets complacent, when everyone is feeling comfortable and there's no fear or uncertainty, that's when the big players, the whales, they get ready to strike. They need volatility. They need that fear factor to create the buying opportunities they crave. And right now, with the Bitcoin Risk Index at these elevated levels, they've got the perfect setup. So while a high-risk index reading might seem scary on the surface, it could actually be a sign that something big, something bullish is about to happen. It's like the calm before the storm, that eerie silence before the thunder roars and the lightning strikes. Deciphering the risk index signals. Now let's talk about how to use the Bitcoin Risk Index to your advantage. First of all, remember that it's just one indicator among many. It's like a piece of a puzzle, and to get the full picture, you need to consider all the other pieces as well. Look at things like trading volume, technical indicators, and overall market sentiment. Are the whales accumulating Bitcoin? Are the charts showing bullish patterns? Is the crypto community buzzing with excitement or fear? If all signs point to a bullish scenario, then a high Bitcoin Risk Index reading could be your signal to buy the dip, to load up on Bitcoin before it takes off. But if the other indicators are flashing warning signs, then it might be time to proceed with caution. The key is to find the right balance between fear and greed, between being too cautious and being too reckless. And that, my friends, is the art of trading. It's about using all the tools at your disposal, including the Bitcoin Risk Index, to make informed decisions and maximize your profits. The future of Bitcoin to infinity and beyond. So there you have it, crypto crew. We've covered a lot of ground today, from soaring prices and skeptical traders to the wild world of funding rates and the Bitcoin Risk Index. It's enough to make your head spin, right? But here's the bottom line. Bitcoin is at a crossroads. The bulls and the bears are locked in an epic battle for control, and the outcome is still uncertain. Will the doubters be proven right, or will Bitcoin defy the odds and soar to new heights? Only time will tell. But one thing is for sure, the future of Bitcoin is anything but boring. With analysts like Rekt Capital predicting prices of $146,641 and Michael Saylor talking about a $13 million Bitcoin by 2045, the possibilities are truly mind-blowing. Now, I'm not saying you should remortgage your house and go all in on Bitcoin. Investing in crypto is risky, and you should never invest more than you can afford to lose. But if you're looking for an asset class with massive upside potential, an asset class that could revolutionize the financial system as we know it, then Bitcoin deserves a place in your portfolio. So, what are you waiting for? Hit that subscribe button, ring the notification bell, and join Gorilla Mansion. The future is decentralized, and it's powered by Bitcoin.